Have you ever thought you were doing everything right with your money, only to find out you've been building a house of cards? You've been lied to? These financial myths, they're not just little misconceptions. They're ticking time bombs. And guess what? They're keeping you poor. By the end of this video, you're going to see why these myths could be wrecking your future and how you can flip the script before it's too late. Let's break down the 5 most dangerous financial myths you need to stop believing right now. But first, let me ask you something. How confident are you in your financial decisions? What if I told you that everything you think you know about money is wrong? Wait till you hear myth number 3. It's a silent killer. Let's dive in. The first myth. It's the one keeping most people out of the game. Myth number 1. More risk equals more reward in investing. Sound familiar? They tell you, the more risk, the bigger the reward. But what they don't tell you is that this blind leap of faith can take you straight into the ground. Think about it. You're 25, you've saved a little, and you decide to go all in on some hot investment, cryptocurrency, penny stocks, or maybe even that get-rich-quick scheme everyone's talking about. But then the market crashes. Boom, you've lost everything. That's what happens when you buy into the more risk, more reward myth. It's like playing Russian roulette with your money. Would you gamble everything on a single roll of the dice? Probably not. Then why do it with your future? But hey, if you love the thrill of losing sleep and watching your portfolio evaporate, by all means, keep risking it all. Just don't say we didn't warn you. So how do you protect yourself? Simple. Smart risk management. Diversification. Remember that word? It's not just for textbooks. It's the difference between waking up stressed or waking up rich. Now, myth number 2 is one that'll make you question everything you've been told about retirement. Myth number 2. You should max out your retirement accounts before investing in anything else. Sounds like the safest plan, right? Put all your money into your retirement account and wait for your golden years. But here's the truth. You could be missing out on opportunities right now. Imagine you're in your 20s, you've got big dreams, but you're locking away every penny in accounts you can't touch for decades. Meanwhile, opportunities, like starting a business, buying property, or investing in today's growth stocks, are slipping through your fingers. Life doesn't wait. Opportunities don't wait. And if you wait too long to diversify your investments outside of retirement, you might be looking back one day asking yourself, why did I play it so safe? But what about timing the market? Surely that's how the pros do it, right? Let me tell you about the myth that could cost you everything. And it's coming up next. Myth number 3. You can time the market to maximize gains. Let's get something straight. No one, and I mean no one, can time the market consistently. Not me, not you, not even Wall Street's so-called gurus. And yet people keep trying, convinced they'll get rich quick. Look, if you have a crystal ball, go ahead and use it. But for the rest of us, let's get real. Picture this. You've been saving up, waiting for that perfect moment to invest. The market dips, and you think, this is it. But then, the market dips even further. Or worse, you miss the market's best performing days because you were too scared to pull the trigger. Now you've missed out on tens of thousands in gains. Ouch. That's the danger of trying to time the market. Instead of getting ahead, you fall behind. The pros know this. And now, so do you. The secret to building wealth is consistency, not gambling on market timing. Speaking of money, Let's talk about the lie we've all heard at some point. If you make a lot of money, you'll automatically become wealthy. Myth number 4. High income equals wealth, really? Because a lot of people earning 6 figures are still living paycheck to paycheck. Let me show you why. Imagine someone earning $200,000 a year. They've got the fancy car, the big house, all the expensive toys. But guess what? They're buried in debt, have little to no savings, and are just one bad day away from financial disaster. Sound familiar? You see, high income doesn't equal wealth. It's about what you keep and grow. Wealth is built through smart saving, investing, and living within your means. If you're not managing your money, that big salary is just an illusion. But let me ask you this. Do you really need a professional to manage your money for you? What if I told you that financial advisors aren't always necessary? It's time to bust that myth next. Myth number 5. You need a financial advisor to grow your wealth. Listen, financial advisors can be helpful, but you don't need one to start building wealth. With the rise of robo-advisors, index funds, and automated investing tools, you can take control of your financial future right from your phone. Imagine this: you managing your own money, watching it grow, all without paying someone to tell you what to do. It's empowering, isn't it? You don't need to be a genius to start investing. You just need the right tools. Look, even if you don't have thousands of dollars to invest, the beauty of today's financial tools is that anyone can get started, no matter the amount. The only thing stopping you is believing you need an expert to do it for you. Now, be honest. Haven't you been told you need an advisor before? How does it feel to know you don't? You've been told these myths for too long, and they've held you back. But now you know the truth. The question is, what will you do with it? The myths we covered today are costing you time, money, and frankly, your future. But not anymore. The time to act is now. Start taking control of your money today. Don't wait. Don't let these lies dictate your financial future. Subscribe for more real, actionable financial advice that will keep you ahead of the game. And remember, the best investment you can make is in yourself.